Welcome to Viewpoints with Brenda. I'm your host, Brenda Ntambirwechi, and on this podcast, you'll hear plenty of conversations with African professionals, change makers, innovators, influencers, and entrepreneurs from all sectors. Fintech is fast proving to be one of the most crucial tools for advancing financial inclusion globally and particularly on the African continent. A lot of the African population remains unbanked, and as a result, in the past few years, there's been a flurry of activity in the fintech space in Africa to deliver easy-to-use, affordable, and accessible financial services to the African population. Joining me to discuss fintech and financial inclusion and the African fintech space is Stone Atwine, the co-founder of Eversend, a mobile-only banking alternative and multi-currency wallets platform which provides currency exchange, merchant payments, and other financial services. As a Ugandan in the diaspora, I've used Eversend for a couple of years now, and I find it to be one of the most convenient tools for remittances. I actually do not remember when I last walked into a Western Union or MoneyGram. Eversend is, however, more than a remittances platform. So, Stone, welcome to the podcast. Tell us a little bit about Eversend and yourself, what the backstory is, and how you got the founding idea.
Yes, thanks for having me, Brenda. The story is quite long. It really begins with me trying to send money back home from Kenya and South Africa back to Uganda to my grandma in maybe I think about 2011, 2012. And I found that to be extremely annoying and exasperating. So I started asking myself, how do we solve this problem where we used to send money through, again, Western Union or MoneyGram, and my grandma had to get on a bus to go pick up the money. It was super expensive as well. And so we started working with a few friends on something that would help with moving money from my debit card to my grandma's MTN mobile money. And I was wondering, why does it only work in one country? So that's how the whole idea came about of how do we make mobile money borderless? And we started building out something then. Eventually, over the years, it has morphed and changed, and we actually closed the previous company. And we've come up with Eversend, where we are really thinking of all the problems that people on the continent have in terms of accessing financial services, not just remittances, but we've gone to what you would call like a neobank. And even beyond that, we're building things for businesses as well. So we're looking at things like, how do you collect money from your friends or from businesses? How do you pay out? How do you exchange money? And our main focus is usually always around cross-border. Every time it has a target with currency exchange. And so we're thinking through, how do we help our customers just beyond sending money to each other, but access to investments, US stocks, cryptocurrency, savings, loans. So we are only about 5% done. But today the Eversend product is pretty simple. It supports currency exchange, multi-currency wallets, so you can hold money in different wallets. And you can also pay for some bills like electricity, insurance, but a lot more is coming up. So that's the basic Eversend today that is available in Uganda, in Kenya, Ghana, Nigeria, and Rwanda.
So at what point did you decide to move from it being Ugandan to multinational?
Yeah, we knew the problem we were solving was an African problem. Like I said, from the very start, we saw it as a problem to do with cross-border. In my mind, a lot of the financial services space has amazing solutions. So if you think about Uganda, for example, if you're in Uganda, if you're in Kenya, you have MTN mobile money, you have M-Pesa. If you're in Nigeria, you have a stellar, fantastic banking ecosystem where people actually move money from one person to another person just through their banking system. It's instant. It's like P2P, just the way you see mobile money working is the way it works in Nigeria, but through bank accounts. So the challenge we saw was mostly around people who need to do cross-border business, people who study abroad, people who work abroad. And that's kind of how we differentiate ourselves from all the other players in the space who are looking to build a digital bank in one country. So our direction was dictated by the problems that we saw. So instead of just building a digital bank for the sake of that, we built a digital bank because we were trying to solve a very specific problem. And that's how we end up in this space where we are. We're not like super excited to compete with banks in Nigeria or mobile money in Uganda or M-Pesa in Kenya. We look at these people as our partners. And that's kind of the direction we took, is that we are solving a problem that has every transaction has something to do with exchanging currency.
So have you had issues with regulation in the financial services sector? Because obviously it's one of the sectors that's the most regulated in the world. Has this had an impact on your expansion?
Yes. So regulation is our single biggest challenge. The problem with Africa is that there's so many different markets. And if you're trying to tackle all of them at the same time, that means that you have to deal with very many different regulators. Each of them have their own regulatory rules and laws, and that makes it extremely difficult. So that has been a challenge. Our strategy is quite simple right now. We look for the path of least resistance to make sure our customers' money is protected. So we work with regulated entities in the different markets where we operate to kind of get into the market. And also regulation has kind of started to change a little bit now. Like, for example, Uganda has just launched the National Payment System Regulations and Act. And because of that, now we are speaking to the regulator and applying for our e-money institution license. We've seen a few changes across different markets on the continent. Yeah, but regulation is the single biggest problem and the single biggest blocker for faster expansion.
Hopefully, these things will be simplified as time goes on. I wanted to speak a bit about your funding journey. How did you decide to raise funds? What has been your approach to financing growth? And what has been your experience as a Black founder of an African startup?
That's really a massive problem. So one of the reasons I left Uganda, I currently live in Paris, but I do spend a lot of my time on the continent. So I spend time in Lagos, Nairobi, Kampala. But one of the reasons I left Kampala was to kind of get closer to capital. My assumption was that it was going to be a lot easier in Europe. It has not necessarily been easier. I think when I moved, maybe it was better to be in Europe. But right now, we see the funding landscape across the continent changing. If you're in Lagos or Nairobi, there's tons of capital now that is flowing into the continent. It almost seems like those of us who have moved to Europe don't even have any advantage. But that was the reason. And the journey has really been extremely tough. So Europe is very different from anything you know. It's different from Africa. It's different from Silicon Valley because the ecosystem is extremely traditional. So being a Black guy trying to raise money from Swiss financiers or these French financiers is extremely difficult. They're basically used to funding white males. That's pretty much the kind of founder they're used to. A very difficult journey for us. This Black dude from Uganda with a funny accent is trying to raise money in this extremely traditional space. It hasn't been easy. So we've got a few people who actually believed in us and gave us a little bit of money in the beginning. So we were lucky to be invited to Techstars, the accelerator. They did fund us with our first checks. Then they followed through actually pre-seed round, which we did in 2020, I think around June, July. So that was a big help. And they did introduce us to a few investors here and there. There's also been tons of our own money that we put into the business. I've also put in tons of my own money at the very beginning. Because of those problems of finding it very hard to raise money, we've had to become very resourceful. So we did a crowdfunding campaign. This also was very good for us because we got to get some of our customers to own a part of the business. And I believe that's a fantastic way to have the best customers, really. Customers who are still going to be rooting for you to win because they own a part of the business. And when we raise money the next time, we're also still going to do the same kind of thing. But I think the biggest piece of advice that I would give to other entrepreneurs, especially African entrepreneurs, whether on the continent or outside the continent, is to be super capital efficient. Because what we did was, after we got our first check last year, we said we're going to focus on being extremely extremely focused on unit economics. So we make sure that when we spend our money, it's coming back, and it's coming back with other little kid dollars. So we don't just burn money and sell it for a percentage of its value. So we are very keen on this. And I think that has really helped us, because now we've put ourselves in a great position where we actually don't have to beg investors for money. We still want to raise money. We're actually raising money right now. We're getting into the fundraising process right now. But we don't need to convince and beg and do all those kinds of things, because we've gotten to a level where we make enough money to sustain the operation. Now, this is not very common with a lot of fast-growing technology companies, but it's something that we focused on. Now, if we raise money, we raise it to grow faster, build faster. But if we don't raise money, we don't die. And that's extremely important, extremely difficult, but it can be done. So that's kind of our approach. And that's what I advise everybody, is to be a great steward of cash, not just throw it around in useless acquisition and giveaways and things that are not beneficial to the company or to your shareholders.
So COVID, we've had this pandemic for, I think it's over a year, and it's been over a year since we've been in these lockdowns and businesses have been impacted. Do you find that ever since business has been impacted by the pandemic, have you been building? Has it been a good time to build and scale?
Yeah, so when the lockdown started last year, when we started seeing the effects of COVID in about April, March last year, what we did was, first of all, we had to go slow on spending. So we killed off all kinds of user acquisition. So that spend was spared, and we got down to building. I think it also helped us a lot because we got to roll out tons of things. We rolled out donations. We rolled out virtual debit cards for our customers. We rolled out a few other things. We made the system more robust and secure. So we kind of went into building mode as opposed to selling mode. And I think that has helped us. Also, COVID, as unfortunate as it was, kind of brought a few dips, but eventually it brought a change in attitude of consumers and our customers, where they are more open to digital financial services. People who were lining up to send money through brick and mortar money transfer operators are now using their phone and doing it from the comfort of their homes. It was mostly around habits that had formed, that I had to go and walk into a Western Union or MoneyGram agent shop to send money back home. And that kind of changed, first of all, because everything was locked down. Secondly, because people realized that this is actually super efficient. So we, across the board, and I think across most digital financial services providers, we've seen a massive uptick in usage. So I think long-term, the effects of COVID around financial services have been digitalization or digitizing. And we've seen increased numbers because of that.
So where do you see the financial services sector in Africa heading in the next 12 to 18 months? And what should we be watching out for?
12 to 18 months is very hard to guesstimate what's going to happen. But basically what I see happening is a massive uptake of these financial services provided by fintech players. Banks are very good as storers of value of money. They do a very bad job of serving individuals, or what you call the retail segment, or very small businesses. So what I see is a lot of that business moving into financial technology companies and startups, because we know how to serve these customers a lot better than most of these banks, and kind of using the banks as the basis at the back, where they basically support us with software and APIs and custody and things like that. I see more acceleration, especially around retail and around payments, and also around small businesses. I think small business enterprises are the most underserved, even more than individuals on the African continent. They provide a massive portion of deposits for the banks. The banks don't lend them at all. I think they take about 1% of the credit that is issued by banks. So we see a massive opportunity there because the services are really horrible for them. And then obviously we see crypto coming in for the continent. Again, because we are very disintegrated as a continent, we've got multiple countries with multiple regulatory structures. It's extremely difficult to move money across borders. But we see things like, starting with stablecoins coming in to really help out with business-to-business payments or P2P payments as well. And then in the long term, we see this African space being very well served by services built around crypto.
Speaking of crypto, is blockchain having an impact on the way you're doing business?
Yes. So right now we don't have any services that are exposed to the customer. So we are not providing any crypto services to our end users. But at the back, we do have a massive operation trying to move money around different African countries to make sure that we have the float or the money that we need to serve our customers, right? So if you move money, let's say from Kenya to Ghana, what happens is that you give us Kenya shillings in Kenya and we need Ghana cedi to pay out because that money takes days to move by itself. So we need value on the other side. So what crypto does for us is that we can use some of these cryptocurrencies, especially stablecoins. We've been using USDC and USDT heavily to move value across these different countries. It happens instantly. So what we would do in that case is sell Kenya shillings in bulk for USDT and then send that through to Ghana and sell that USDT for Ghana cedi. That operation pretty much happens in seconds or maybe minutes, to be fair, as opposed to the traditional way of trying to move that money from Kenya to Ghana, which takes days, and then you have to do FX in New York, and you have two correspondent banks in New York. Each of the banks keeps the money overnight, and it takes 3 days minimum. It could take even weeks. So crypto is playing a massive, massive role in our operation to kind of move value around and make sure we can serve our customers conveniently.
That's really interesting. Do you feel that there's a trend that has emerged in fintech in recent years that you did not expect, but which you're now incorporating into Eversend, or which has impacted Eversend?
I think one of our unfair advantages as Eversend is we've got our ear to the ground. Like we really kind of understand where the space is going. So not a lot of things surprise us, but we do learn of tons of stuff that the general population may not know, or we have insights on what is going to happen in a few months or years that the general population or some of the other founders who are not very keen on this kind of thing, what they may not know. So a few things. When we started building Eversend, we knew, for example, that we wanted to build a multi-currency wallet. We knew that we were going to be multi-country from the beginning. We knew the problems and the trends that we were solving for. A lot of players do not understand why we do this up to today. But we've also learned a few things. So we've learned the massive problem in serving small business enterprises, and we are building something in that direction. There are basically sectors that are completely underserved, like very short-term loans, overnight or 2-day, 3-day loans for small businesses that need cash in different countries. This only makes sense for some of those customers that have a need for multiple currencies. But those kinds of things are things that we see, and we will see a lot of new companies coming that are playing in that space: business banking, merchant accounts, multi-currency wallets, short-term lending. These are things that are going to just go through the roof. It's going to be a rocket in the next few years. And then with African Continental Free Trade Agreements coming in, we expect cross-border trade in Africa to increase. And that kind of cross-border trade requires payments as well. So again, cross-border small business, we are very bullish about cross-border small business payments. That's kind of what we are thinking through right now. And lastly, just to reiterate again, the usage of crypto in providing all these services is going to be the new norm, especially as some of the regulators become more difficult with cryptocurrency, which is really the only solution that I see for us solving some of the problems that we have.
So on this journey that you've been with Eversend, is there anything that you would have done differently?
Yeah, probably put Eversend HQ somewhere else, probably spend more time in Silicon Valley because that's where the cash is. I see people who have 30% of the results we have raising twice the amount of money we can raise just because they were in the right place. I think what I was trying to achieve by moving from Kampala to Paris, I would do that better and instead spend more time in Silicon Valley because you really want to give your business the absolute best opportunity for it to thrive, for it to grow, for it to become successful. And every little thing counts. If the tax man is a problem, if talent is a problem, if regulation is a problem, if the market is small, all those things. There are a few things we've learned, like how important the size of the market is that you play in. Getting as close as possible to capital is extremely important. So there are a few things that we could do differently. And that's one of the things is getting closer to the capital. I'm aware that not everybody can be able to do these things, but it's just something to think about and say, what's the thing that I can do that would make sure that my company becomes successful? Because what we do is extremely, extremely difficult. And you need any small advantage that you could possibly get.
So what's next for Eversend? What's on your priority list for you and the team for the next couple of months?
One of our disadvantages, the one thing that people always tell us is you do too much. You're building cross-border P2P, you're building savings, you're building loans, you're building cryptocurrency, you're building stock trading. Now you want to build B2B. We are prioritizing stock trading in US securities. And the reason for this is that there's a lot of loss. People lose a lot of money by trying to store or invest their money in some things. Whereas if they invested in a Google here, in a Facebook there, in a Tesla there, they can see consistent returns. So the US stock market has consistently returned maybe about 11% for decades on average. So some people have money and they would like to invest it and make sure your money works for you as you sleep. And we see that as a very nice way of bringing an extra service to our customers. So we are focusing on this. Next, we are really focusing on helping small businesses that do cross-border trade. We are very specific, not just every small business, but a small business that buys, let's say, seafood from Mombasa, or payments businesses that need to offer more currencies to their customers. So we are also working on a B2B product. Those are the two things where we are focusing our energies. And right after we finish with those two, then we go into crypto products as well. So that's where our focus is right now, kind of help people with wealth accumulation and wealth protection, and then help people with doing business across borders on the continent.
Wow. I'm very excited, especially about the stock trading. I know that's been something that people have been asking you for quite a while now. And I think it's exciting what you're doing with Eversend. I've used this platform from before it was Eversend. So it's exciting to see where you've taken it and how far you're willing to go. And I just want to thank you so much for taking the time to do the podcast. I obviously wish you the best. I'll continue to cheer you on from the sidelines and probably be like your biggest ambassador. Thank you, Stone.
Thanks for having me, Brenda. And thanks for supporting. I know a number of customers you've introduced to Eversend. So it's fantastic.
Thank you for listening to Viewpoints with Brenda. To keep the conversation going, follow us on Instagram at Viewpoints by BN and follow me on Twitter at Kasabiti. That's KASABIITI. To hear more conversations like this, follow the podcast, subscribe, like, and feel free to leave us a rating. See you next time.